Taking a look at markets, stocks actually ended higher for a fourth straight day yesterday, with the Dow Industrials racking up its longest winning streak in 2 months. But we've got a partial government shutdown underway right now. Could that throw cold water on the rally? Let's bring in Rebecca Walser, Walser Wealth Management CEO. Good morning, Rebecca.
Good morning.
This shutdown, we've already talked about it in the show already, is the IPO market. Normally in January, except for 3 years in the last decade, we've had at least a couple of strong offerings in the IPO market. It looks like nothing, partially because the SEC is shut down, but also investors seem to be a little wary about what this could do to the overall economy.
Yes, I think nobody likes, investors especially do not like uncertainty, and obviously we've had some very positive movements from the Fed, and that has been helping the market the last few days. But the meeting yesterday with President Trump walking out was not helpful at all.
Yeah, no. And, that actually, we saw the market actually dip right as the news broke that he basically just walked out of the room. And it was, it's interesting because it's well known that President Trump likes to look at the stock market. It's, somewhat of a barometer, I think he believes, as to his performance as a president. But the market's all the volatility. Some would say that the disruptor in chief, which is the reason a lot of folks wanted him in office, is now kind of adding to the market volatility. Is that a fair assessment?
I don't necessarily know if that's fair. It's really hard for a president in his position to have a long-term policy that, he ran on, frankly, and he's been in office for 2 years. I think he's feeling a lot of pressure in the last 2 years here to deliver on that biggest promise of the wall. And so the market is very short term, as you know, day to day. Everything impacts it immediately. And he's looking at a more long-term trajectory here. So, yes, we know that he does track the market, and it is a barometer for him of how the economy is doing. But we don't like a shutdown, an extended shutdown. However, I think he went to the Oval Office, had his first address to let investors know and let the world know, let the U.S. know, and certainly the Democratic leaders know that he's in this for the long haul, and that basically he is looking for that wall border funding. And so we do have the uncertainty of this government shutdown. It is the second longest right now, Cheryl. We had a longer one under Bill Clinton, but we don't have a lot of historical data to sort of say, okay, what does the market do when we have this happen? And of course, the other impact is if the IRS, which the commissioners already said that the returns will not be delayed, that they will start to call back furloughed workers. But if, we are expecting those rebate checks to affect, obviously January sales numbers. So obviously that could happen.
And we should add that, we mentioned this earlier, that Fitch warned that an extended shutdown could actually really hurt the U.S. credit rating. We're AAA right now, but that could be in jeopardy. And you have to wonder if investors are really reacting finally today after 4 days of gains to the uncertainty out of Washington. A lot at play right now, Rebecca. Thank you for being here. We appreciate it.
Thank you.